All right, let's get more insight into China's housing market with Craig James, managing partner of Precision Advisors. Craig, good to have you with us. Thanks for joining us.
Thank you, Michelle.
So, Craig, we're seeing some signs of stability in China's housing market. It appears to be on less shaky ground. From November, year over year, prices up 0.9%.
Correct.
Are you safe in saying that this is the beginning of a trend?
Well, we'd like to think so. I mean, prices have stabilized. I still think we're in the ICU, if you will, with respect to the supply glut that China and everybody knows about. But with respect to, particularly in Tier 1 cities where we've seen a healthy demand function, you had Shenzhen up nearly 40% year over year in terms of new home prices. You've seen Beijing up 6.5% and Shanghai up 10%. So that's an encouraging dynamic that's at play.
Well, you mentioned that Shenzhen is up 40%. Is that not perhaps a concern that maybe now there's some overheating in the top tier cities?
Well, listen, it's China, and there's always a clear and present danger with overheating in the property sector. I was just in Shenzhen and Guangzhou 2 weeks ago, and actually we visited two major property developers. They had seen year over year a 10% increase in terms of home prices. The demand in front of Chinese New Year was prolific. So that's all good and well. I think the government is behind this to a large degree. The stimulus that they've done, the PBOC cutting rates 6 times since November of 2014 certainly has helped.
Do you think that these effects will trickle down to the smaller cities, though?
So the Tier 2 cities, I think that's where a lot of the betting is taking place right now. Places like Wuhan and Dalian and Nanjing, these are cities that everybody expects to recover. The ruralization effect with the migrant worker moving to more urban areas, I think you'll see that manifest itself more pronounced in these Tier 2 cities than you will in Shanghai and Beijing as the government expects these Tier 2 cities to perform.
Well, that is one of the policies that we're seeing at the conference that's happening at the moment, the urbanization of migrant workers at the Central Economic Work Conference. The government is trying to promote that. How do you see that working out?
Well, we think that that's a long-term trend. Obviously, with the government support, there's 275 million migrant workers that can find themselves into urbanized areas, if you will. But we do think that that plays out slowly. That trend in and of itself is not enough to get excited about the property market.
What other action do you see the government taking?
Well, there's been wide talk about further tax cuts. Primary mortgages at first and second homes, cutting that, increased. PBOC is at 4.35%, excuse me, so there's plenty of room there. I believe that China, given the fact that the Chinese property market is 15% of their GDP, they're fully behind this. So that, more than anything, is a reason to get excited about Chinese property.
Let's talk a little bit about the impact of the stock market. It's been very volatile. In June, there was a huge correction. The Shanghai Composite wiped out most of its gains. It is still up about 11% year to date. Now, keeping in mind that the market is made up of about 75% retail investors, what impact has the volatility in the market had on the housing market?
Well, we believe that the equity volatility that most retail investors have experienced in 2015 had a pronounced impact on both their willingness to participate in equity markets going forward and as a substitute good, looking at real estate as a more, if you will, stable asset class. Anybody that's gone through, I mean, we look at the H-share market as a barometer. The H-share market in the middle of June was nearing 15,000. We're now below 10,000.
Right.
So we've had more than a 40% decline in the space of 6 months. That's a lot of volatility for anybody to absorb, let alone a retail investor. So that phenomenon, we believe, has played into this pronounced effect of looking at real estate as a more stable investment.
So do you see that the majority of the buyers then are first-time homeowners or property investors?
I think it's first-time home buyers. You're seeing a pronounced effect across China of people looking at homes. Obviously, there has been a prolific amount of buying over the last 10 years as urbanization has taken root, but we believe there's more to come, and that phenomenon continues.
Craig, the Fed in the U.S. just raised interest rates for the first time in nearly a decade. That is supposed to make the dollar stronger, expected to at least, and the yuan weaker. Do you think that that's going to have any kind of follow-through effect on the Chinese housing market?
Well, we actually see somewhat of a disproportionate effect with the Chinese consumer, actually, excuse me, we don't see a strong causal link between the two. We believe that most of the domestic policies that are in place for the Chinese consumer, for the Chinese first-time home buyer, they will not be impacted as much by a Fed increase because, again, the PBOC is at a different point in their life cycle in terms of fighting their own internal consumption problems. And I believe that that will be more of a unique aspect of the Chinese economy as opposed to something more macro-related.
You see this trend of stronger housing moving into 2016?
We do.
Right.
I think that all our data points suggest that this is a healthy, sustainable recovery. You had the Shanghai property index up 30% since September. In our channel checks with some of these property developers, they're very excited about what they're seeing in the way of organic demand for housing. I think it's a sustainable and healthy rally from here.
All right, we'll leave it on that positive note. Thank you so much, Craig James, Managing Partner of Precision Advisors.